Hey there! Imagine this. You're shopping online late at night. You spot the perfect sneakers. You add them to the cart and hit checkout. You enter your card details, but as you were about to hit that Pay Now button, a thought hits you. Is this actually safe? Think about it. You're sending your private financial keys into the open internet. Do you really know where that data goes? Could a hacker be watching? Or is your card number about to be leaked on a database for the highest bidder? In some cases, when it is your first time making an online payment, you may feel doubtful about clicking the Pay Now button. Alternatively, you may risk clicking the Pay Now button, and in just a few seconds, your payment is approved. The pair of shoes is on its way tomorrow. But hold on. It is not just about the risk alone. Where did your money actually go? Who checked if you even had the funds? And how does the store owner get paid without your card number floating around everywhere on the internet? Today, we're pulling back the curtain on the hidden world of online payments. We're talking about payment gateways, the invisible superhighway that moves trillions of dollars every year without you even noticing. By the end of this video, you'll never look at Pay Now the same way again. Before we dive, first, let's meet the key players behind every online purchase. There are usually 5 main characters in this story. You, the customer, the merchant, the online store or e-commerce site that is selling the sneakers, the payment gateway, the secure middleman we're focusing on today, the acquiring bank, or acquirer, the financial institution that manages the merchant's account and handles incoming funds, and the issuing bank, your bank or credit card company that actually holds your account. Don't forget the card networks like Visa, MasterCard, or American Express. They act like traffic cops, routing everything safely. It looks complicated, right? However, the entire process takes only 2 to 5 seconds. Mind-blowing, right? So what exactly is a payment gateway? Think of it like a super secure digital cashier at a physical store. When you insert your card into a machine, the machine reads it and sends a signal to the banks. But online, there's no machine. Therefore, the payment gateway steps in. A payment gateway is software or a service that collects your card details safely, encrypts them instantly, and converts them into an unreadable code which sends the request to the right places and tells the website yes or no in seconds. The payment is accepted or declined. Popular examples? Stripe, PayPal, Paystack, Razorpay, etc. These power millions of websites you use every day. Fun fact, in 2025, the global digital payment transaction value is projected to hit around $24 trillion, and payment gateways are the gatekeepers making it possible securely. Now, let's walk through what really happens behind the curtain when you click Pay and if your card details are actually safe. Step 1. You enter your card number, expiration date, CVV, and name on the card. The moment you submit, the payment gateway grabs your details through a secure, encrypted tunnel. Think of it like an armored truck that protects your data. Using SSL, Secure Sockets Layer, your card details are scrambled into an unreadable code that would take a supercomputer 1,000 years to crack. But it even gets better. Most gateways use tokenization. This means the merchant or the store owner never sees your real card number. Instead, they get a token, a random string of characters that is useless to a hacker. Even if the store's or e-commerce database got hacked tomorrow, the hackers get nothing but digital junk. Your real money stays locked in the vault. So never panic again. Your card details are safe from hackers, the bad guys on the internet. Without this protection, online payments wouldn't even exist. Step 2. The gateway packages your information and shoots it to the acquiring bank. The acquirer doesn't check your balance. It forwards the request to the card network, Visa or MasterCard. The network recognizes the card issuing bank, therefore routing the authorization message to them instantly. Step 3. Your issuing bank gets the request and checks several things, like does this customer have enough funds or credit? Is the card active? Does this transaction look suspicious? Do the card details match? If yes, approved in milliseconds. If no, declined. Step 4. The approval zips back the same path: issuing bank, card network, acquirer, payment gateway, back to the merchant's website. You see payment successful, and you get your order confirmation. But wait, something important still hasn't happened. The money has not moved from the customer's account yet. Here's where most people get surprised. What just happened is called authorization, like a temporary hold on your money. Behind the scenes, the bank says, we'll let this go through, but the actual cash doesn't transfer immediately. The actual money is placed on hold. That's why your balance may look reduced even though the business hasn't received the money yet. The real money movement is called settlement, and it usually happens later, in batches at the end of the day or within 1 to 3 business days. This is why refunds aren't instant. The system operates in stages, not in real time. During settlement, the acquirer collects all approved transactions. Card networks calculate fees, interchange, and assessments. Funds are transferred minus those fees. That's why sometimes you see a pending charge for days before it finally disappears from your available balance. Everyone takes a small cut. Card networks charge interchange fees, just around 1 to 2%. The acquirer and the payment gateway take processing fees. For example, Stripe charges about 2.9% plus 30 cents per transaction. The total for the merchant? Often 2 to 3.5% per sale. What are these fees for? Fraud protection, global reach, instant trust. Security features like tokenization replace your real card number with a unique code, meaning even if data leaks, hackers get nothing useful. In the Asia-Pacific region, digital wallets already handle over 50% of e-commerce transactions. Payment gateways make that seamless. So next time you buy something online, remember, behind that simple Pay Now button is an incredible, lightning-fast network of banks, networks, and gateways, all working together in seconds. It's one of the quiet miracles of modern finance. Simplicity is usually the result of a very complex design. If this breakdown helped you understand the magic, don't forget to hit that like button, subscribe for more simplified explanations, and tell us in the comments section the worst online payment experience you've ever had. Stay smart, stay squared. Thanks for watching. See you in the next one.